Welcome back to Investing Talk Podcast. Today, we're tackling a question many of you have sent in. Is Coinbase a good time to buy now? We've scoured the latest financial reports, analyst evaluations, and market sentiment to bring you the critical insights you need to navigate this incredibly dynamic stock.
That's right. Our mission here is to sort of distill the complexities of Coinbase, helping you truly grasp its current standing, the unique opportunities it presents, and crucially, the substantial risks involved. We'll unpack the core numbers, the prevailing market trends, and what the seasoned experts are actually saying.
And before we get into the material, if you find this kind of detailed analysis helpful, please remember to subscribe, like, and maybe leave us a comment. It genuinely helps us bring more of these analyses to you. And if you're feeling extra supportive, consider buying us a coffee. It definitely fuels these sessions.
Yeah, absolutely.
Also, if there's a specific company you'd like us to look into next, just let us know in the comments below. Your feedback truly helps us shape future discussions. So let's unpack this. We've gathered some comprehensive material on Coinbase, and we're going to guide you through its fundamentals, valuation, technicals, and what the current market sentiment suggests about its future. First up, let's peel back the layers and examine Coinbase's core financial health. What do their recent numbers tell us about what's happening under the hood?
What's fascinating here is that Coinbase has indeed shown recent revenue growth, which is, always a positive sign for any company. However, the key insight is that they actually missed their latest earnings expectations. They reported earnings per share of $1.94 against an estimated $2.18.
Okay. A miss.
Yeah. And while their net profit margin is currently a healthy 21.14%, the sustainability of that profit is a major question mark. It's largely due to the highly competitive and frankly inherently volatile crypto market. It's a good margin, but well, it operates in a very unpredictable environment.
So we're seeing growth, but that earnings miss certainly sounds like a yellow flag. Does that make the forecasted growth for next quarter less reliable? Or is it maybe just a blip in an otherwise upward trajectory?
That's a great question. While the miss is notable, the continued revenue guidance for the next quarter, around $1.64 billion with an expected earnings per share of $1.39, it suggests management still sees forward momentum. The challenge isn't necessarily reliability, maybe, but the pace of growth could be different than what the market has come to expect.
Right.
And that difference, well, it can impact investor sentiment significantly.
Okay. And how about their cash situation? Are they sitting on a strong liquidity position to handle any, unforeseen bumps?
Absolutely. Their liquidity looks robust. The company shows a strong quick ratio of 2.52.
2.52.
Now, for those new to this, a quick ratio like that basically means they have $2.52 in easily accessible assets for every dollar of immediate bills or short-term liabilities.
That sounds very healthy.
It is. That's a very healthy buffer, suggesting they're in a strong cash position to handle short-term needs and operate without immediate financial stress. While our sources didn't cover every single detail of their overall debt and cash flow trends, this quick ratio certainly points to a solid financial standing.
That's reassuring. In such a competitive space, how is Coinbase holding its own? Are they maintaining their market dominance?
Indeed. Coinbase has carved out a significant niche here. It remains a major player in the cryptocurrency exchange sector. They benefit enormously from strong brand recognition and a perception of stability within what is, let's face it, an extremely competitive and fast-evolving industry.
That brand recognition is key, isn't it?
Absolutely. This established position isn't just about market share. It's a key competitive advantage that sets them apart and builds trust.
But I imagine it's not all smooth sailing in that market. I mean, the crypto world is infamous for its wild ups and downs, right? Those are external factors.
Oh, far from it. The crypto market is inherently turbulent. And for Coinbase, two massive headwinds really stand out. High competition is always present, but critically, ongoing regulatory pressures are a constant challenge.
Regulation, always looming.
Exactly. These external factors aren't just background noise. They could definitely impact Coinbase's future trajectory and profitability. New rules can fundamentally change how they operate or even generate revenue.
Now, that strong brand and solid liquidity we just discussed in the fundamentals, how does that translate to its market value? This is where valuation comes in, right? Helping us decide if the price reflects those fundamentals or if it's maybe running ahead of itself. What do the valuation ratios tell us about Coinbase right now?
This raises a critical question for Coinbase. The current price to earnings, or PE, ratio is very high. It's standing at 68.03.
68. Wow.
Yeah. For a company like Coinbase, that's not just high, it's a clear sign the market is pricing in substantial future growth. The key insight here is that you're essentially paying a premium for potential, not necessarily proven stable earnings.
Right, paying for the future.
Exactly. This makes the stock highly sensitive to any missed targets or unexpected slowdowns, much more so than maybe a mature, slower growth company.
That's a powerful indication of market expectations. With that PE in mind, what are analysts, the folks who spend all day crunching these numbers, what are they saying about where the stock price should be? Is there a general agreement, or are they kind of all over the map?
They're pretty spread out. Analyst price targets for Coinbase vary quite broadly, actually, from a low of $185 all the way up to a high of $510.
$185 to $510? That's a massive range.
It really is. The consensus, or the average target, is typically cited somewhere between $320 and $340 per share.
Yep.
But you have some analysts suggesting an implied price downside of about 20% from current levels, while others see that significant upside potential to $510.
So that range itself tells a story.
Exactly. This wide range itself is an insight. It implies significant valuation uncertainty. It means there's no single clear agreement on what the stock's true value is right now.
So no clear consensus on value, which sounds like it adds to the complexity for anyone trying to make an investment decision. It's not a straightforward buy or sell signal just from valuation alone.
Not at all.
Which means we need more pieces of the puzzle. Let's turn to the technical side, what the actual price action is doing on the charts. What's the current price and where is it heading based on its recent movements?
Okay, so as of July 22, 2025, Coinbase's price is $413.63.
$413.63.
What's interesting is that this is significantly above both its 50-day simple moving average, which is $296.15, and its 200-day simple moving average at $251.86.
Whoa!
Yeah. This isn't just a number. It indicates a really strong upward trend in the stock's recent performance. It suggests the momentum is currently well to the upside.
Wow, so a 50-day SMA at $296 and a 200-day at $251 while it's trading way up at $413. That's quite a run-up.
It is.
But for a stock known for its wild swings, does that just mean it's maybe ripe for a fall, or is this momentum genuinely different this time? Is it a smooth ride, or are there significant bumps along the way?
Oh, far from smooth. Think of it this way. If the broader market is like a gentle current, Coinbase is a whitewater rapid.
Okay, good analogy.
Its beta is 3.70. That's significantly greater than the market average of 1.
3.70.
Yeah. This isn't just an academic number. It means if the S&P 500 moves 1%, Coinbase could, in theory, swing almost 4% in the same direction, up or down.
So much bigger swings.
Much larger price swings compared to the overall market, yes.
Yeah.
And therefore, inherently higher risk. You should definitely expect a bumpy ride, and maybe you need an iron stomach for it.
That beta certainly paints a vivid picture. So what about momentum indicators? With that strong run, is it already overbought? Is it suggesting a pullback might be due soon?
Well, the 14-day Relative Strength Index, or RSI, is at 68.79.
Okay, 68.79.
This is a momentum indicator that tells us if a stock's price movements are maybe getting ahead of themselves, essentially, if it's been bought too much, too fast. At 68.79, it's nearing that overbought territory, which is typically considered above 70. But it's not critically overbought just yet.
So close, but not quite there.
Right. It means there's potentially still some room before we hit extreme levels that often precede a sharp reversal. We've also seen good buying strength recently. The stock closed higher on 17 of the last 30 trading days. Those are the green days we talk about, indicating pretty consistent upward pressure.
Okay. That volatility, of course, plays into the overall sentiment around the stock. So beyond the charts and the fundamental numbers, what's the general feeling around Coinbase? How are analysts rating it? And maybe more importantly, what are insiders, those closest to the company, doing with their own shares?
It's a bit of a mixed bag, actually. Most analysts, roughly 27 to 29 of them, they largely rate Coinbase as a buy, though there have been some periods of neutrality in their recommendations. However, something that really demands close attention is this substantial insider selling.
Insider selling. How substantial are we talking?
Over 685,000 shares, valued at around $222 million, have been sold recently by insiders.
Wow, $222 million. That sounds significant, especially when analysts are mostly saying buy. How do we reconcile that? Isn't that kind of a red flag?
It absolutely is a signal that raises eyebrows. Insider selling can reflect caution or maybe a lack of confidence from those who know the company best. And it's definitely a data point investors tend to watch very, very carefully.
Yeah, I bet.
It creates this interesting paradox when you put it next to the widespread analyst buy ratings. And if we look at the broader sentiment, the fear and greed index specifically for Coinbase stands at 39.
39, which means...
That indicates fear among investors for this particular stock right now. Below 50 is generally fear. Below 25 is extreme fear.
Okay, so fear...
Yet, paradoxically again, the overall market sentiment is often characterized as bullish in the near term for Coinbase.
So fear on the index, but bullish overall sentiment. That's confusing.
It is. It's an interesting disconnect. It really highlights the mixed signals at play. While individual investors might be feeling fearful, the broader market narrative seems to be leaning positive, at least in the short run.
Okay, so given these mixed signals, the high PE, the strong technicals but nearing overbought, the analyst buys versus insider sells, the fear index versus bullish sentiment, what are the big events on the horizon? What could really move the needle for Coinbase's stock price, for better or worse?
Earnings reports are always a major catalyst, especially for a growth stock like this one. The next one, expected in the coming quarter, with its forecasted EPS and revenue figures we mentioned earlier, that will undoubtedly impact sentiment and stock movement. Big time.
Right. Earnings are always huge.
Beyond that, as a crypto exchange, Coinbase is extremely sensitive to changes in regulation. New regulations, or even just shifts in regulatory winds, whispers of new rules.
Yeah.
Those could be major catalysts, maybe opening up new opportunities if they're favorable, or significant risk triggers, creating new hurdles if they're restrictive.
And the broader market, does the performance of Bitcoin and other cryptos, or just the economy in general, play a big role here?
Absolutely. Macro factors like overall cryptocurrency market trends, is Bitcoin booming or busting? And general macroeconomic conditions will remain important potential catalysts, especially given Coinbase's high beta.
That 3.70 beta again?
Exactly. When the crypto market is hot, Coinbase tends to benefit disproportionately. And the same often goes for downturns. It really acts like an amplifier for the crypto market's moves.
Okay. Speaking of risks, let's maybe crystallize those. What are the main concerns for potential investors looking at Coinbase right now? Where are the major pitfalls they need to be aware of?
If we try to connect this all to the bigger picture, there are several distinct layers of risk to consider, I think. Stock-specific, you have that stretched valuation relative to current earnings and the significant insider selling we just discussed. Both of those could lead to swift price corrections if sentiment shifts.
Okay, valuation and insider selling. Got it.
Then, sector-specific risk. The crypto industry itself remains inherently highly volatile. That's just its nature. And it's subject to continuous, often unpredictable, regulatory uncertainty, which can dramatically impact business operations overnight.
Volatility and regulation in the sector. Check.
And then there are the macroeconomic risks. Coinbase's high beta means disproportionately larger price swings during market downturns. So investors are exposed to potentially greater losses if the overall market struggles.
Higher risk in down markets.
Right. And finally, that strong short-term trading volume combined with the high beta. Well, it just implies heightened price swings day to day. That significantly increases the trading risk for anyone looking to get in and out quickly.
Okay, that's a pretty comprehensive list of risks. So given everything we've discussed, the growth, the liquidity, but also the volatility, the valuation, the insider selling, all those risks, what's the overall investment rating for Coinbase right now, and what kind of strategy makes sense?
Based on a synthesis of all the data points we looked at, Coinbase currently receives a rating of 6 out of 10.
6 out of 10, so kind of middle of the road, leaning slightly positive.
Exactly. It isn't a screaming buy, but it's certainly not a sell either. It signifies, I think, a balanced potential for upside, but you absolutely have to be aware of the elevated risk and those definite valuation concerns we talked about. It suggests potential, yes, but mainly for those who truly understand the landscape and can stomach the ride.
So if someone is looking to buy, maybe someone with that higher risk tolerance, what's a good potential entry point to consider given all these factors? Is there a level that looks more attractive?
Well, the data, particularly the average analyst targets, suggests that a more, let's say, conservative entry price might be in the $320 to $340 range.
Okay, $320 to $340. That's quite a bit below the current $413.
It is, and that's the point. Entering around that average analyst target level could help reduce potential downside risk for investors, offering a more buffered entry compared to chasing it at its current higher price.
Makes sense. And who is this stock most suitable for? Is it for quick gains like day trading, or for someone looking to hold for a while, short-term traders or long-term holders?
Given the volatility, this stock is undeniably more suitable for medium to long-term investors who possess a higher tolerance for that volatility.
So not for the faint of heart, and probably not for quick flips.
Probably not. While short-term trading might offer opportunistic plays for very experienced traders who thrive on volatility, It comes with significant risk and is generally not advisable for most people. It really depends on your personal comfort level with potentially big, sudden price swings.
And any guidance on managing that risk once you're actually in the stock? For instance, what about setting stop loss and maybe take profit levels to help frame potential outcomes?
Definitely, that's crucial with a volatile stock like this. For stop-loss guidance, setting it approximately 10–15% below your entry price is generally advisable, given the stock's significant potential swings.
Okay, 10–15% below entry.
Yeah. So, for example, if you entered around that $340 level we discussed, setting a stop-loss somewhere around $290 would be a reasonable way to limit potential losses if things go south.
And on the upside, take profit targets.
For take-profit guidance, targeting maybe 20–30% gains above your entry aligns pretty well with some of the analyst upside potentials we saw. So from a $340 entry, that might put targets around the $410 to $440, $450 range.
Okay.
These are just general guidelines, of course, not hard rules, but they're crucial for establishing a disciplined approach to managing risk and reward in a stock as dynamic as Coinbase. So just to summarize everything, Coinbase is indeed well-positioned within the crypto exchange industry. It boasts solid liquidity, clear revenue growth prospects. That's the good news. However, it also carries significant volatility that high beta has seen substantial insider selling recently and is currently trading at a, well, stretched valuation, all of which demands significant caution from investors.
Right. So while analysts are mixed but leaning slightly towards a buy, there's that huge range of price targets, reflecting the underlying uncertainty and the highly dynamic, almost unpredictable nature of the crypto market itself.
Exactly. For short-term trading, the volatility and mixed sentiment suggest it's a very risky play with potential reward, but mainly for those who are highly risk-tolerant and really understand the nuances of high beta stocks. For long-term investment, the stock could certainly deliver substantial upside, especially if the broader crypto market stabilizes and maybe matures a bit, and if Coinbase can sustain its growth trajectory.
But lots of ifs there.
Lots of ifs. It's absolutely crucial for investors to continuously watch those valuation metrics, keep an eye on regulatory news, and just be prepared for potentially significant price swings. This market is anything but predictable.
So here's where it gets really interesting, I think, for you listening. Given this dual nature, high growth potential in a still relatively nascent industry versus extreme volatility and regulatory uncertainty, what does this all mean for your personal investment thesis? How much risk are you truly comfortable taking on for the potential rewards in a market that can shift so dramatically almost overnight? That's a really important question for you to consider as you shape your own portfolio and decide if a stock like Coinbase fits. That brings us to the end of our comprehensive look into Coinbase. We hope this analysis of the numbers, the sentiment, the risks, and the potential helps you make more informed decisions.
Remember, understanding both the immense potential and the inherent, very real risks is absolutely key in volatile markets like cryptocurrency. Continue to monitor these factors closely and definitely stay adaptable. Things change fast here.
Indeed, they do. Thank you for joining us today on Investing Talk Podcast. We look forward to bringing you more insights soon.